A joy to be here with you on this Monday. I hope you are all well and doing great. Looks like New York coming out with a vengeance. There seems to be lots of sell programs being active. I don't know if it's CTA action or what is going on. Jay Cora, what's the good news? Listen, this is serious. Honestly, the good news is that knowing when to be in the market, when out, and on what side is absolutely priceless. The only thing we have as far as equity markets in the market right now, everything completely on the sideline, except here Tesla. And yeah, Tesla is defying gravity. I'm not sure what's going on. I didn't even catch a headline about what might be taking place with Tesla, but holding an open position here, 8%, 8.8% into profit. As far as positioning here, we were running a hedge. We had Ethereum long and Cardano short. Ethereum taking out a stop loss and now pending short, and Cardano holding its open short. Again, we don't know whether or not that hedge is going to cover itself. 2.8% stop out on the short side on Ethereum. We'd like to see it covered here with the Cardano trade. But in a time of uncertainty, which this is a significant time of uncertainty, right? We have this week, obviously, a full calendar, by the way, full of Fed speakers, and also ending Thursday evening in the US, Friday morning in Japan, with the Bank of Japan monetary policy rate decision. They're expected to hike 25 basis points. A lot of people think that's going to kick off what is going to be the carry trade unwind 2.0. Just going back over here to the summer of 2024, you saw a massive unwind take place. There are some who think that maybe this is already priced in and it's going to be a non-event. Remains to be seen. We have obviously also tomorrow non-farm payrolls. That's a big print. And more importantly is, how does the market respond to it? Finally seeing the Treasury general account letting go of some of its ammunition over here, as they think maybe they need to support here this fragile liquidity situation that the Fed is just addressing now. And we see there's nothing of new issuances on the calendar. We have $175 billion offering out there right now. Markets continuing their slide after the repair, and then we are coming in for our retest right now. We want to stay above the green line over here. Trading below it opens up an opportunity for a test of the November low. And if that were not to hold, then this is probably going to become something that's deeper and longer lasting. Some people asking, what happened to Luke? Luke Groman. Oh, I don't know about. That's true. There are probably a lot of. Look, right now we are running so far this particular cycle the largest drawdown. Not only are we in drawdown, we are running in a place over here where we have seen and we know, just jumping back over here, where we took out massive structural support. This was, again, right after the intern leak for the spot ETF launch, where support was established. The shakeout door. How many people back at 38,000 were like, it's over? That was a sell the news type of event. No, that was not a sell news type event. That was a shakeout. New all-time highs by February. That indeed major retest occurring. And then the last Japanese yen unwind, major structural support. April didn't even take that out. The April tariff saga didn't take that out. What happens? Are we getting close to the Supreme Court ruling on whether or not the tariffs are able to remain to be implemented or not? How is the market going to react to whatever the outcome of that is? And is there going to be any response from the Trump administration if it rules against them? Then you can see that we've taken out that important level. I mean, major structural breakdown, and after the breakdown so far, we're having trouble regaining that support. You can see that we are just running into that resistance, and now we are looking for, after the retest, potential resumption down. You can see that a lot of people watching this bear flag and breaking down right now into a heavy data dump week over here, whether we're looking at CPI, whether we're looking at jobs numbers, whether we're looking at central bank activity. And we're moving into what is it is the lowest liquidity couple of weeks of the year. Not until we get back into after the first week of January does that liquidity return. So now is not the time to be looking to be a hero one way or the other. Like, I see, and the question is, well, what happened to Luke? Luke Roman just turned bearish. He turns bearish at night, as per him, at 95,000. And what made him turn bearish, right? Quantum computing. I mean, listen, if you think quantum computing is the risk to Bitcoin, uh, we come from different backgrounds, and then he turns bullish over here at 30,000. So what when did you turn bullish? And I don't know. Was it after the intern leak? That's a good time to get bullish. It seems late in the cycle into the end of October. Well, maybe it didn't happen then. Maybe it happened before that. Maybe it happened in April after we saw the regional bank crisis in the U.S. and then the Fed respond, and maybe that's when he turned bullish over here. Maybe, and a lot of our peers did, right? A lot of our peers did. Um, I believe that's when my friend Ben did, right? $30,000 Bitcoin bull market. Much like Luke, I think Ben is looking forward to potentially some, bear market activity in 2026. I don't think Luke is looking for a bear. Well, I don't know. He did mention some 4-year cycle behavior, and that's what he was following. So, 30,000. It's a little late. I think that that's about a difference of 80% from where we moved in to the market. 70% difference. Well, more than 70%, because that's from 18,000. 75% difference. That seems to be, is that someone that I want to look for a reference on Bitcoin? I think Luke, in all fairness, is someone who has a bit of a longer term horizon. I think that's fair. I I I think that it's very very easily, depending on price, you could see Luke become bullish again. I don't know. I listened to what was it, forward guidance, Luke's assessment of what's going on over here. It seemed to me the two main takeaways from Luke's analysis was two things, and that was 4-year cycle behavior and quantum computing risk. So yeah, um, what about us? And what do we think? And is 55,000 Bitcoin still cheap? Or is that going to be tested? Listen, I'm not making any assessments as far as what I think is going to happen here over the next couple of weeks. I'm very interested to see what happens this week. There are a ton of Fed speakers. There are a ton of data, jobs numbers, CPI numbers, and we have the Bank of Japan and the reaction. You know what? I think that as we move into January, we're going to have a lot clearer picture than one could possibly have today. And I think that for each and every one of you, I think it's really important to value, like having a model that you don't have to guess through all of this. There's nothing else like it. By the way, just for fun, on the V4s, they are positioned short already on Ethereum. And I mean, the V2 did much better on the long side here on that last on the last up there Ethereum trade, but we have a bit of a head start here on the short side now, and I think that a good time this week is going to go us to just do a quick review of V4's performance over the last few months. I know that Phoenix Fire has done a full now back test over here, 2021, 2022, 3, 24 on V4. I know that, Hypernova, big shout out. Everyone has a lot of, everyone's looking forward to the release because it is taking an edge, which is already substantial, and increasing it But it's not just as easy as like I want to release it. There's a lot of continued dev work that is being done, and I thought we would already be live. We will be soon. Bitcoin also short over here at 4.8. What we can do though for fun, not for fun, for important purposes, is two things. Number one, what we could do is we could get alerts into the Discord for V4 just so people are wondering, oh, I wonder, I'm trading V2, CTMX, but I wonder what position V4 has. And then also we could talk to Dogga Nation about getting inside the CTM dashboard here, the algo dashboard, also the positioning for that. Both of those things seem really prudent to do right now, and then we'll continue. Tom Lee's calling for a bear market with the recovery by year end. Yeah. No. Now, here we go. Tom Lee. But I mean, so I'm gonna. I don't know if now's the time to turn bearish. I know a lot of my friends are bearish. I know Crypto Burb, good friend of mine, completely bearish. Everyone believe, or a lot of people believe that this was just the Wall Street cheat, and that was like the bounce. And here we go. We're about to come in over here. Yep. And it stop losses at the same time. Oh, okay. Onto we had an issue though. I don't know what the issue was. I mean, I know what the issue was. If you on 108 Bitcoin, it was showing an open trade that the templates weren't showing last week. But Dog Nation, I need to get you then and make sure you have the full V4 release here. And there's still the discrepancy about which Bitcoin version on the release is going to be used, but we could always adjust that if we need to. A lot of people thinking that we have the potential for January to hit new all-time highs. Interesting. Listen, well, this is a big deal. This is a big deal. Now, the question is and should become, though, what will be the ramifications of the Japanese yen rate hike, and whether or not that counteracts the actions being done here by the FOMC. I see some people talking about, like, not only is the Bank of Japan looking to go ahead here and tighten monetary policy, EU looking to run QT, and they're talking about $1.2 trillion into 2026. I think it's going to be substantial less. I think people are getting a little carried away about what their prospects are going to be here for tightening, specifically as the U.S. moves towards easing. But we'll get in. We'll find out what happens. You all know ahead of time. My whole projection was that it's going to be some time here for the liquidity, which was just pressed, which is why we had to see the Federal Reserve put the brakes on, stop QT. And now I thought they were going to be raising this at $20 billion per month. I put out the tweet before they did. I said, well, there are some projections this could be as high as 45%. My projection was 20 billion, which was last cycle. Now they're coming in at a pace double to that. It's going to, within the next several weeks, I do think that we're going to see liquidity stabilize, and then risk should find its footing. And then we'll see what 2026 looks like. Right now, though, we are under pressure. And as far as like jumping in here, number one, very clear as day, the importance of this level we just talked about, that needs to be reclaimed over here. That's all the way up. That's almost back to 6-digit Bitcoin, depending on when that happens. It's upward sloping. As we move into January, that will be above $100,000 Bitcoin. The thing about this last pivot here by the Fed is it's likely going to be a big one. Like, this is just the very beginning of them pivoting their monetary policy. Silver looks insane. I see a lot of chatter about coming out from China, and silver here at 63. people are like, it's time to hoard uh, SSD cards, and memory is going to be rising in price now. And I took a look at a purchase I made, I don't know, less than a year ago, and it's it's up 25% more. So there may be something there to that. You have to wonder about all of the phones and computers and everything like that. When does this become a problem? When will the market pay more attention to it? I don't know, but here we are at silver at 63 and gold at 4,300. We're just looking and maintaining over what is happening, and that seems to me to be, gold is pricing in monetary reset. Bitcoin has and is the hedge against the debasement. They have not been debasing the currency this whole run up on Bitcoin. A lot of people, like, because of our lens of the 4-year cycle and how it's been looked at within the community for a long time. They're like 3 years up, 1 year down. But I've always and continued to look at monetary policy as being a big driver here of what's taking place. And I think that it is notable that Bitcoin during QT has been able to make such a massive investment. Don't forget, the last time QT was running over here was, the beginning over here, the mega drawdown in Bitcoin. Previously, over here, this is when QT was running monetary policy tight. Monetary policy tight over here. This was the turn where the Fed was tapering their QE program, began their rate hikes, and then something happened over here where Bitcoin was able to bottom with monetary policy tight and remaining tight this whole way. So we'll find out. Should you keep buying silver? Oh, like, you talking physical or are you talking futures? You know, um, that I think that's important to distinguish which one of the two you're the way that you're doing. Look, if you're stacking silver, listen, how about this? Those that are holding silver, when are you looking to sell? I knew a lot of people, a lot of people as silver was over here, $25 an ounce. Silver, 63.70. They're done. They're so done with it. They've been holding this thing for so long and it's not doing anything. And they talked about. Now I've actually seen and talked to some of them, and actually their whole perspective has changed. And okay, we'll have some remodeling to do. I might let go of a little bit, but you know what? This thing's probably going much higher. I would imagine if you look at, 3, 5, 7 years from now, do you think silver is going to be lower or higher than 63? For me, and someone that has been running through silver for and holding silver for so long, you know, the price would have to be significantly higher for me to think about selling. Significantly higher. I'm not talking about $120 silver. It would have to be significantly higher. Um, Man, that was probably one of my worst trades of my life, Vacanet. 2008, buying silver at 8 and then selling it at 12, thinking I was a hero of sorts. Definitely not. Definitely one of my worst trades ever. Just not understanding what it would have been like to continue to hold. Um yeah. Does it feel like chasing right now? Where could you be preemptive now? A lot of people looking at the gold and Bitcoin cross. I'm going to jump over and find a chart I could work with over here. Let me jump in. I remember over here as we were, someone asked, "Hey, could we look at Destiny Tech 100?" They hold a bunch of SpaceX and a bunch of OpenAI. I remember someone in the comments is like, "How dare you look at that? They have a 2% fee." And I was like, a 2% fee? Are you kidding me? We trade this. Do you think that like a 2% yearly management fee is going to make a difference? This thing over here popping like crazy. I mean, for sure, even from the first break until now, 30% return. That's not picking bottom to top. That was picking out of the sweet spot over there. I wish I would have had an order in over here, and I definitely getting and looking to be a little bit potentially greedy on what would a good entry to be. Anyway, let me jump over. Let me take a look at what is going on over here with Bitcoin and gold, and just jump back into a larger time frame. So big move up, right? I mean, does that look like a rounding bottom developing? Could be, for sure. Major breakout here, and then faded, and then over here. Every breakout in the past has been faded. Is this time going to be different? There's no doubt this time is different as far as what is taking place fundamentally with Bitcoin. I mean, sorry, with gold. But is that something that you're not going to see Bitcoin follow suit in? I heard a headline. I don't know if it's true. It was obviously uh, some country, not a country in the G20, probably not a country in the G60. It might have been Kazakhstan selling not a small amount of gold and using it to buy Bitcoin. Like, do you think by the end of the decade that we begin to see sovereign countries also adding Bitcoin to their balance sheets? I don't think they're going to add silver at any point in time. Do you think that they're going to be adding Bitcoin? That's the question. Someone thinks they're going to be adding silver. I assure you, they will never add silver to their balance sheets. That's not going to happen. But I do believe that they will add Bitcoin. And the time that they begin adding Bitcoin to their balance sheets, I expect that Bitcoin is going to be a lot higher than $85,000 as they begin doing it. Every other time in the past, we've seen this cross. By the way, obviously, this is bear market territory for Bitcoin. You have the 2022 bear market. You have the 2019 bear market. You have the crisis, which is where we are in cycle, right? We're over here in cycle. And what I mean by that is this is where the Fed moves from tightening to easing. And this is right over here, right? In this particular area over here. And you were seeing Bitcoin breaking out, gold breaking out during Bitcoin in that time as well. Um, is this time different in so much as that for sure gold is definitely pricing in real time monetary reset? Yes, it is. There's no question about it. Do I think that this time will be different? That Bitcoin is not going to catch its legs, especially as liquidity does turn. And probably the main portion of the thesis is this right here. Let me just find one more chart. And it's this right here. This is, and as everyone was tracking M2, I first over here started in 2022 and being like, listen, M2 is absolutely weak. You have to watch monetary base total. It was that conversation with Ben that we did together. And then again, not too long ago, last year, as everyone is watching global M2, I was like, watch out, because by the time that peaks, you're going to see a massive pullback in Bitcoin ahead of time. Watch monetary base total, and you can see monetary base total over here coming off massively. The one poor thing about this is that this is a lagging indicator, and as much as that we don't get the data, in real time. It lags by a month. But we're going to see right now, though, as the Fed is stopping QT and that balance sheet expansion begins, we're going to see this happen. This is the last time that QT stopped over here, September 2019, and the balance sheet began going the other way. This is where you're going to see a monetary base total begin to rise. This over here, this is what I was thinking actually as I was listening to Luke's thoughts about why he's turning bearish over here as Bitcoin is roughly 33% off its all-time high. Or all fairness, probably, we'll just get exact over here really quick and talk about, from off its high to 95,000. 25% off its high. Not bad if Bitcoin is going to have a correction of 75%, which again was noted by Luke. Like, listen, every 4 years, this thing has had a drawdown. He said between, well, between 76% and 85% the last 12 years. So, um, I'm looking at, and then when we saying that, I was thinking to myself or picturing, well, you know what? I have a different opinion. I see monetary base total about to make a turn over here. I think that we're going to see risk stabilize and go the other way. And then whatever narratives that you're seeing right now, there's going to be a whole new narrative. By the end of the first quarter, we're getting not just in Bitcoin, the AI boom and everything else, there is going to be a different narrative, and then people will be talking about that. Yeah. So Bitcoin is ah. When's the next time? Is it you know the end of 2026? Is it the end of 2026 after X amount of drawdown? What do you think the drawdown is going to be this time? More importantly, do you think and like are we going to take out this over here? This is the structure that we have coming off of the November December low. If you zoom out over here, you can see this is coming back to, if I were to do this, let me do this to get a look with you. This is the COVID low over here. That's above 55,000 Bitcoin is cheap. It was 55,000 Bitcoin is cheap for a reason. Do you think that we're going to tag or take out 55,000 Bitcoin is cheap? That would be, it's close. That's only, I should say, that's only from the all-time high of 56% drawdown. My whole thesis is that this particular cycle, we're going to see drawdowns that are less than 60%, between 40 and 60 with maximum pressure. Maximum pressure in my mind would have come off some type of upside breakout to the upside. Then that mean reversion could have put us into that pocket of 40 to 60%. Could that happen? Could that happen right now? We're almost to 40% right now. So obviously that could happen into that 40 zone. Uh, you know, Relatively easy from where we are. And you could see that would be taking out the April low over there. That would be tasty if it was a liquidity grab, if that were to happen. Do I think that we're going to trade lower than 55,000 Bitcoin is cheap and give people the opportunity of a 70 to 80% drawdown in order to go ahead and after exiting, be able to get in a better positioning? Or is the risk greater this time that you're going to actually have the unfortunate opportunity of, if probably not buying back higher, of probably staying sidelined? Because most people that get caught on the wrong side, they continue to wait for it to drop lower to get back in. These are real risks, and amongst them was, okay, well, you know there are some people who, why Bitcoin bull runs is or Bitcoin's trading 125,000, they're like, oh, what, I just might as well buy and hold. But Bitcoin bull runs is out since 113,000, safe and protected on the sidelines. I don't know. I don't agree. I hope I'm not the last man standing as far as thinking that we're not going to see any type of bear market in duration and drawdowns as other people see into 2026. You know, no. Oh, yeah. Bitcoin, like 107, I think you're talking about. Very cool. Let's just jump in over here and see what's going on. And right. So very cool. Do you still run 2.0? I thought you believe that you run a combination of all, but yes, indeed. Just jump down over here, and you can see that on this last down move over here. By the way, there was a stop loss out of Bitcoin, and it never being able to reset and take an opportunity on the short side. Much different on V4, which was able to go in and out during that whole period and taking some short side action over here and feeling naked as Bitcoin is coming down. I don't know about that. Let's take a look like this, very cool. And just look at, let's do this. I'm going to look at the short side alone with you. Very cool trading 107. And let's just take a look at the short side. Let's take off the long side. And then you see, look at the difference in compounding, by the way, when you add the short side over here. And let's go ahead and add back in the short side, add back in the long side. And you look at, I'm going to take off the short side now. If you were just trading buy side only, look at the difference that little 260% at the right time compounding offers in difference. Instead of a 34,000% return, 127,000, and that's only with a total of 263. It has a max drawdown of 20% and a percent profitable of 40%, which is pretty good. It's pretty good with. There we go. When you have average winning trade, 11, I was looking at 244, 11%, and average losing trade. So it is greater than a 5-to-1 risk to reward with a 40% win ratio. So you're saying, well, this particular time, I feel a little bit naked, like off on, not being as price is under pressure, not being participating in this. And I would say, well, there are a lot of other times that happened as well. Look what happened in 2022 in the bear market. Very cool. And we'll come back and we'll look at that 2022. This is a bear market downside mega price action. And that's 2023. So here is one that we were definitely left behind on. This was November price action. Stopped that over here and then not participating in that mega drop. Over here as well, not participating in that mega drop, right? We don't get them all. We never have and we never will. Now, let's just take a look together at what the difference here is just on the short side with Bitcoin on V4. So let's do that and just look at the difference of potential performance on the short side alone. Why are we getting no data there? Hold on one second.
Order filled.
I don't know why this is not our fault. This is TradingView's fault. But over here under the performance for that same period, just on the short side, right? We're seeing a difference of, instead of 260%, a difference of 1100, almost 1200%. So I'm trying to see the number of trades if it's showing over here. Maybe if I just refresh the browser, TradingView will show it up. There we go. Now it's showing. So 78 trades compared to 43 trades, much more active in the market. And that's because it's not left out in any of these periods where it has, if it doesn't enter and it's like the cross of the deviation to the downside. So V4 will be participating in all those areas. Is that going to help migrate the feeling of feeling vulnerable, naked, left out? Very cool here as prices hitting on the short side. It is. Is it different? Yes. Is that why we've been working the last 2 years to just increase the edge? Yes. Does that mean that, you know, this right here on 107 on the short side is not a substantial edge that makes substantial improvement? Of course not. It absolutely is, but yeah, so right now, with good reason, you feel like, I'm not participating on the short side, and that's what it is. If you're in 107 and trading on the short side, right? Very cool. I think you trade, and please let me know. Do you still trade V2? I don't know if you do or you don't. That obviously is in right now, but we will soon have the ability here to fine tune our approach here. And you can see the massive improvement on the sell side alone over there, as instead of with a 19% drawdown and 260% return, instead of a massively different edge here. And that's where we go. I look forward to it as well. So narrative driven, as far as we've seen things like, well, so with Bitcoin, I don't think it's narrative driven. By the way, one of Luke's reasons for turning bearish on Bitcoin over here at 95,000 was that he never saw Bitcoin decouple from big tech, and he was expecting that big Bitcoin was going to. Again, that's different than our beliefs. We weren't looking until Bitcoin has a substantially higher market cap that it would decouple from Bitcoin and tech, and maybe even take on some more of the characteristics of how gold acts at different particular times, but not yet. It's still a very small market cap here, over 10 times less than gold's market cap. It's not yet acting as any type of safe haven or risk off asset, because it never has. The question is have we entered into a risk off regime, or as the Fed is pivoting here and beginning to expand the balance sheet once again, do we expect that this was the risk off period? And we've always said around that time of the tension between QT stopping and the balance sheet expanding, it's a rough patch, and being on the right side is really important during it. However, I guess that's where our expectations differ of what happens next. And yeah, we still have significant repairs to make. We're still under pressure. Those that are trading, Bitcoin bull runs alone, 113,000 is a lot higher than 85 where you are today, but that's not going to re-enter also until it gets back pretty close to that price, unless we have further downside pressure that lasts longer. Only then would it take on a potential better entry. It's a pretty. So he thinks 56,000 is going to be the low of the bear market. That's pretty good if that's what happens. Um, but yeah, so we have the low over here at 75,000, and taking out the April low, that would be a major event to see whether or not indeed that is a liquidity grab. This is looking like, this is 67 and rising over here. This is major support coming in from the consolidation of the prior to the election. I don't see it. I'm glad that I have a little bit of a difference of opinion than a lot of people held in high esteem over here, because we're gonna find out who's right, you know? And again, that's not the price action of today and this week. And I'm not talking here about leaning into our positioning and how early and on time. I'm talking about just getting this right from a discretionary macro perspective. Yo, yeah, that would be completely bearish. And I mean, not only, I mean, I don't know what happens, obviously, with the ramifications of the Bank of Japan as they move towards tightening again, and whether or not we're going to see any type of stress that we saw going back a year and a half ago. My assessment is that likely we will not at that particular point in time. The Fed was also in the process of running QT. They were tightening. Now they're changing that. The balance sheet is moving the other way. It counteracts that. I'm also under the belief that a large portion of that carry trade got unwound during that particular time. I don't think that we're going to see a repeat behavior. I know a lot of people are looking for it. We're aware of it. We're going to be watching it and we'll find out. So, you know, why I'm aware that we could take several weeks for liquidity to stabilize. I think it's in the process of stabilizing as we speak. Like the Fed already began buying Friday, $8 billion, adding to that reserve management. That continues, and it's continued at a substantial clip. Um, yeah, I, I don't know. We're gonna find out soon, but I think that we're going to end up here strongly on the right side. So risk is, I mean, the dollar coming off right now is obviously something that is going to help global liquidity over here. That puts pressure off of liquidity. You can see that the dollar was rising. That was putting a drain into liquidity. You saw this expressed here also through monetary base total. But now what we're seeing is, the Fed printing reserves, and that's going out to banks. And I don't even know why I can't find my there it is. Not there. Fed is in the process right now of beginning to print reserves. That's being sent out to banks who are likely going to be issuing more debt and coming into the economy. And we're going to see a major turn here in monetary supply. I think that we see risk go with that. So I don't have really, if you're looking here at the 10 and 2, I don't really have any thoughts to add except that this is the longest this is the longest time that I know of since an unversion of the control curve that we have not control curve. Yield control curve is underway and just begun. No, this is the longest ever since the uninversion of the curve that we've not entered into a recession. Now, could it be because of the massive spending during this particular moment as the AI boom is underway? For sure. Um, Either which way, that is different. This is different. But a lot has been different this time. And again, with good reason, as we've entered this new era of fiscal dominance and the deficits and the government spending, they need to continue. Sailor's not getting liquidated. The 10-year I haven't checked out. So, I mean, I don't know if it's concerning. I think it's right that the 10-year here is beginning to price in some signs here as the Fed continues easing into a boom of further inflation down the road. Again, this is being done with the crude oil prices completely suppressed. The question is will the market be able to, and would the market be able to absorb the 10-year at 5%? And again, I've talked about that in the past as I thought we were going to be breaking out to the upside, and we haven't gone anywhere since. We have been, this is my breakdown line over here at the bottom, and above 4.6, this looks like then we're going higher than 5%. But again, I think that we would want ultimately go a lot higher. I don't think that things would necessarily break if that were to be tested. I'm curious what's going on here though with our 2-year. Let's check in over here at what's going on. And yeah, I mean, I would expect after the first quarter, as we get closer to Powell's term winding down, that we see a further bid of the 2-year, unless something drastically happens unless we start seeing growth actually picking up and reaccelerating at a much stronger pace than anticipated at that time, then obviously the need to lower rates, regardless of the rhetoric out of the Treasury and out of from the president, if it's not warranted and not needed, then ultimately I don't think that the Fed is going to do it. But it seems to be headed in the right direction as anticipated. And here we are. It's a big week ahead. We're going to have to go ahead and continue to navigate it. Again, I once again, implore you right now, because it's a lot easier now. It's a lot easier than when Bitcoin's trading at 125,000 and everyone's in expert phase, to value and understand what it means to be able to, over the long term, make sure that you are on the right side and thrive. You need to be able to cancel out the short term to be there to look. Capital preservation is absolutely of utmost importance. We wound up going through this whole last few months of September, a lot better than I anticipated. I thought that we were going to get chopped up a lot. That's not what happened. We were actually on the upside September and October, even though I thought we were going to see some bearish moves capitalize. And since then, a couple of stops out on FNGU, on NVIDIA, TQQQ staying on the sidelines, and on the short side, MicroStrategy just leveling up, basically almost 100% in cash outside of a small Tesla trade right now, taking a stop loss on Ethereum, so far hedged by Cardano. Is Ethereum late to the party here, looking to take on the short side now? We could see the difference in agility here with the access on the short side. But let me just take a look at Ethereum with y'all. See what's going on over here. And it much like Bitcoin, it seems to be breaking down here from a bear flag as well, except with Ethereum, it hasn't yet broken down. So you could see that our short entry is right into support right now. Until that breaks, we are potentially getting chopped up. We'll find out. Listen, for now, have a beautiful day, everyone. Stay strong. Stay strong. This is a time of massive uncertainty. It's reflected through our positioning. We're not max allocated one way or the other. We are simply mostly holding cash and waiting for some type of sustained trend to develop in order to begin positioning in. Everyone, God bless you. Have a beautiful day, CTM. Someone doesn't like that we're in cash. I don't know what to tell you. I can't help you. There's nothing I can do for you. We're sitting here in a massive position of power. We are absolutely just maintaining our purchasing power, waiting for the next moves, and slowly taking, sometimes you're taking like slashes, little stop losses. This time it's going the other way. The last few months, just taking small gains, preserving that capital, waiting for things to materialize, to be there, and not like other people who will be like, oh, I have to make back X amount to get back where I was to begin moving forward. There's nothing like knowing when to be in the market, when out. I'm sorry, like Satoshi said, anyway, God bless you. Good luck. Have a beautiful day, everyone. This is the mindset of someone who understands what it means and what it takes. And there will be that honeymoon day. The honeymoon hits different. The honeymoon can hit really when there's like massive uncertainty out there and you're either positioned short or on the sidelines, much like what was experienced with MicroStrategy, us, being able to take out 30% plus on the short side. A lot of other people that, like, were not expecting, got kind of punched in the face, didn't have a plan. Honeymoon then is okay, but honeymoon hits best when, you work through all that. The next set comes in, and not only are you riding it, that's when honeymoon, it feels really good. But you got to go through all the different periods and phases in order to first of all be there and then experience it. God bless you all. I don't know. Someone was like, thumbs down, blah. Love you guys. See y'all soon. Have a beautiful day.